right, so the Fed has left the rates unchanged, and the markets are pretty much all over the place. The Dow is down 113 points now, seems to be selling off a bit, and the Nasdaq up 17 and a quarter. Even the S&P 500 is up 7 and a quarter, and the Russell is down 8.4. Gold is down, silver is down, oil is down second day in a row. Bonds and the dollar are mixed. The bonds are down and the dollar is up. So even though the market is all over the place, but mostly on the downside, bonds are down too, 16/30 seconds. Very interesting markets. We've pretty much gone nowhere. The markets are in this pretty much amazing trading range, and that's about it. Not too much really going on. There's so much fakery going on here. I don't know if everyone heard me on the Tuesday Teardown with V yesterday on the Rogue Money, but we talked about just how undecided everybody is. You know, the White House is trying to do one thing, the Fed is doing another. It's just all over the place. Yesterday, about 5 minutes before the opening bell at 9:30 a.m. New York time, the White House released a statement saying that they were going to resume trade talks with China. Now, this was not something that was actually on the books. There's no date, there's no agreement for China to sit back down. Just the idea that the White House said that they were thinking about doing it. And that was enough to keep the market afloat. The Dow was down 80 points when that came out, and then it rallied 80 points after it came out and stayed positive for the rest of the day. The Dow also closed positive yesterday, but then right after that 4 o'clock bell, when the futures resumed trading after 4:30, everything just took a nosedive. You know, it was definitely a bull trap yesterday. And now as we speak, we have this 2-bar Charlie setup, this bearish 2-bar Charlie setup on the Dow this morning, and that has not changed, the bearish 2-bar Charlie. We almost had a bearish 2-bar Charlie on the Russell. We missed it by a tick. It would have been a guaranteed 2-bar Charlie there. Gold tried to set one up. I noticed that. And there was something else. Oh, yeah, the Bitcoin futures. Bitcoin futures also has a bearish 2-bar Charlie. So I found that to be quite interesting as well. And look how fast the Bitcoin futures has turned from that, retreating from that high. I just knew that before the Bitcoin pulled back, it was going to more than likely get to between that 9 and 10,000. But it just didn't get enough legs underneath of it for that to happen. Just like with all the other markets, you know, whenever some things get going, the bears come in and they want to attack. So that's where we are. I mean, to be honest with you, this is what everybody expected. This was an important day because there was a chance that the Fed was going to do something unexpected because of the tariffs and all these things. But the bigger issue is going to be Friday's job report. So Take Back Friday has all the earmarks of being extremely volatile and interesting because of the jobless numbers. It's supposed to be very important. I think the consensus is that we added 190,000 jobs. So if we do 190,000, then I don't think it's going to really affect the market one way or another. But if we miss on that 190,000, I think it's going to have a little short-term panic in the market, and I think we're going to see a huge sell-off come Friday. If we do not meet or beat that 190,000 number, it's supposed to be a very important number for whatever reason. and that's something everyone's looking at. Another thing to take note of today, for those of you who have not really been paying attention, is that when you look at the inverse ETFs, excuse me, in relation to how the markets have been in this trading range, up one day, down the next day, you'll notice that the inverse ETFs are really not moving. They're not really like trending or breaking out. That's because the moves that we have seen on the downside in the equity market have pretty much been knee-jerk reactions, mainly a news-driven market, all right, where any kind of rumor or news that comes out, it causes the market to trade toward the lower end of its range. Anything positive or rumors of positivity, then the market tests the higher end of its range. Now, the reason why today is very important is because if we take out the support lows, you will notice that the behavior around the intraday price inflection points will be pretty nasty to the downside. If you take a look at this daily chart that we got here, excuse me, you will notice here on the Dow, all right, you see that that bearish engulfing candle that we have going on right now. This is really telling, because if we close here near these lows, then you've officially topped out of this range, and now you're beginning to trade at the new range, and this will be today's close. If it closes here during the bottom of this range, will be the new highs. All right, and then the new support lows will be down here below the 25,121 level, which is this trend line support here. And we may even test the secondary long-term trend line support area here down at the 24,871 range. So today is a very important day for this Dow. All right, very important day. When you look at your intraday price inflection points on the post-wave price triggers, you'll see that some of these have already triggered, like the Dow and the S&P. All right, so the intraday price inflection points have already triggered. However, when we look at the weekly, that's the one that is a little bit more important right now. And that's going to be back in here. All right, so if we close below 25,264, which currently we're trading below that now, then that's going to put an end to this top side of this trading range, and then the market starts to move lower. So this is pretty critical. The other part that I want you guys to take note of is that at the end of the day, the bar from July the 25th is still where we're at. This is the major trading range, and so it's a wide range. You got top side north of 25,451, and the bottom is at the 25,000 level. So 25,000 is going to be a very key support. That's why I bring up these two trend lines here, these two trend line support areas, because if breached, not only have you seen the highs for the year, but you may have possibly seen the highs for some time. And then the market set themselves up for a huge letdown in the fall, September, October timeframe. So very important things are manifesting slowly in these markets. Now, when you look at the weekly, all right, see the weekly chart here, you'll notice that the markets are trying to break out, trying to come back here and test these old 26,684 highs. Now, just by looking at the weekly chart, everything will be intact. You see that prices are above the momentum support of 25,069, all right, and seems to be holding that, pretty steady. So looking at where the weekly price inflection point is versus where we are now at 25,284, you can actually write off today's activity as nothing more than just volatility and noise. But on the daily chart, you can't just sweep that under the rug, because you see we've lost momentum. We lost it here, regained it yesterday, and now we're losing that momentum again today and pushing lower. All right, so today is a key day, and this could set up what's going to happen come Thursday and into Friday, Take Back Friday. So that's where we are right now. As far as central banks around the world, they're all pretty much dancing to the same tune right now. Nobody's really fooling around with rates. All right. I know Peter Schiff was on the Business Channel the other day, and he was talking about how raising rates, would really put unadded pressure on the equity markets along with earnings. All right. So the lady then came back and was like, oh, this has nothing to do with this. This is the greatest market in history, greatest time in history. Jobs are low, blah, blah, blah. Inflation's low. And then he mentioned that, no, you're just hiding that inflation across the aisle. So you got some in the equity market going on. You got some in cryptos going on, just different places, different areas. So you're kind of masking, instead of masking volatility like the equity market can do at times, the economy is masking the inflationary protocols. So that's what you see happening right now. The trade war thing is another issue because earlier today on Bloomberg, the White House was commented of saying the opposite of what they said yesterday with the White House, saying we're going to sit down with China again. Today, now you get the reverse of that, like a total 360, and them talking about, doing more tariffs with China. So you see how they talk out of both sides of the net. All right. So we live in very uncertain times. Okay. Even though we have information that goes contrary to what the government reports say, they're still holding to their line. They're towing that line, saying that the labor market is continuing to strengthen and there's job gains. Yet we see that the reports that come out with these earnings are saying something totally different. Every day we hear some company laying off people or closing up shop. How many retailers have to close before they say, you know what, okay, fine, we're in a depression? All right. Stores have closed up where I'm located. I'm sure they've closed up around where you guys are. Things are pretty bad, man. I mean, they just don't want to deal with it, but they're pretty bad. And we already see these signs reverberating not just across the economy, but also in these markets as well. Look at how the trend broke in this Dow. It was just going straight up. Then it broke, and now we've been going sideways to slightly lower. It's just now trying to break out. But we're in jeopardy of this being a double top and a false breakout. That's why I pointed out those support areas, because that's key. That's where we are right now. The market needs to maintain this momentum. If it loses it on the weekly chart, which it looks like it probably will, because if this daily chart now starts to turn down, it's going to pull this weekly chart down too, and we'll probably end up settling below this support. So, like I said, Friday's going to be a really big day, folks. It's going to be a really big day to see what happens there. So, with that being said, does anyone have any questions? Anything you want me to take a look at? Questions on the on this morning's pulse waves or anything like that? Now is the time. Why you got me? All right, let's see the U.S. dollar. Sure, let's take a look at that dollar. I hit the wrong thing. I'm so used to typing the old way. All right. All right, good old U.S. dollar. Okay, still loading. We'll wait patiently. All right, that's a good point. Someone typed in the trading room, Trump wants it lower, Fed wants it higher. Pretty interesting. You know, it was the inverse in the beginning. The Trump White House said they needed uh, the dollar to be just a little bit stronger because they were trying to tweak things with trade. They wanted trade to be a certain way. And as it stands, like I said before, I'll repeat it again. In order for the Trump White House policy that they talked about and planned on for it to work, the price needs to be maintained somewhere between on the low end, I'll say 89, and on the low end, and about 92 on the high end. So that gives it three points to oscillate between. And what we've been getting instead is the market's been here hanging out at this 94 level. This 94 level is pretty strong. Anything, above 94 is very strong. It's very bullish, all right, as far as the dollar is concerned. So I don't know exactly what it is they're trying to do, but having the dollar strengthen like this is not, I don't see how that could fit into their plan. They wanted a weaker dollar, but not too weak for import-export, purposes. But this is kind of weird. We're in this Kumo cloud here on the weekly chart, as you can see here. Kumo cloud is here. And as you can see, the market's trying to hold that momentum. It's trying to keep it. We've been letting it go like up, down, up, down, up, down. And you're inside of the Kumo cloud of death, so price action is going to be volatile. And we need to get these trend lines and price outside of the Kumo cloud. Top side if you want the market's going to be bullish. Below the cloud if it's going to be bearish. So right now the market is trying to create a new bullish uptrend. And you can see here how the intermediate support has crossed above the long-term trend line support. All right, so that is bullish. Yeah, I know it happened in the Kumo cloud, but if prices can start to move outside of the cloud, then you'll start to see the trend line separate, and then you build up more and more momentum behind that. And that could push the dollar back above par, which would be very interesting. I talked about that some time ago, that all things being equal, this right here, this lift off from this support area back here, that yeah, we could see the dollar get back above par. It's still considered the world reserve currency. That's what we are. Yeah, I did see that. Someone said that the renminbi, whatever you say it, China has been devalued seriously the last weeks. So could that have anything to do with it? Possibly just a little bit, but our trade with China has been shifting because of these tariffs. So we can't really say, pro or con on that just yet because we don't know what's going to end up happening. All right. Are they going to work something out, or are these tariffs are going to get worse? Are they going to add more tariffs? And then is China going to retaliate and put tariffs on our stuff? So when you start throwing in tariffs, it really negates your currency. It doesn't matter if your currency is strong or weak. You start slapping tariffs on stuff, that changes the game totally. So, I think China has problems of its own that they're trying to work out. Their housing market collapsed and they have other issues going on, just like the U.S. has issues. So I don't think that really has too much to do with it at this point. And the dollar is still bullish. There's no signs of death of the dollar, even though they starting to talk that talk again, talking about economic collapse and stock market collapse and collapse this and collapse that. Every time they say it, the dollar gets stronger. Now, recently, we topped out at 95.65, but now, as you can see, the market's trying to get a bounce off these supports. and I think that the dollar is going to break out again. Once it gets out that Kumo cloud, I think it's going to be off and running. You can see here on the daily chart that price action and trend lines are above the Kumo cloud right now. So that's what it is. And now the Dow is starting to come back a little bit too, bouncing off of this sell-off. So it's just volatility. Markets still range bound. When it comes to the equities, they have a very wide trading range that they're in right now. And that's just what it is. Nothing has really changed. And, you know, gold and silver are moving sideways too. Just not a lot going on. Really, at the end of the day, it's just market manipulation. You know, like I said, with the White House making that statement yesterday to bolster prices, and then you have issues like we are seeing yesterday. We had all the markets moving together. Crude oil was the only thing that was down yesterday. The dollar was rallying, bonds were rallying, equity markets were rallying, gold and silver were rallying. And it's funny because gold and silver has been one day it'll act like a commodity, and then the other day it'll start acting like a currency. So today, with the dollar being positive, you see gold and silver acting like a commodity because they're negative. They're down today. So things have been out of whack for a while. All right, can I pull up the USD? Let me see if I do have that. I don't know if I have that on here. Let me see. It's thinking, so I guess it does have it. That'll work. Probably take just a moment to pull up since I never pulled it up before. We'll see. I do have those on the sheet, right? The USD CNY and the USD CNH. I do believe those are on the sheet. So that's good. But this is not pulling up. Let's see. Yeah, I don't think I have those available here. That's probably why it's not pulling up. Let me just try the other one. CNH. Ah, what do you know? Okay, here we go. The US dollar Chinese yuan spot. Okay, here it is. On this weekly chart, you can see that the market has been coming off somewhat. Today, it's definitely lost its daily momentum support, and yesterday it lost it too. Testing the trend line support area now, right here, and it looks like it may hold. Looks like this is a pretty strong support. We'll see if it holds, but definitely, you know, markets off its highs, pretty good, pretty significant. We filled this gap that we made here too. See the gap from December 28, 2015 to January the 4th, 2016. Well, what in the world's going on here? I just looked at these dates. This is totally off. This is not right. Ignore everything I just said. I just looked up and saw the dates on here. Okay, I guess they don't have the data available. Sorry about that. This is all it's giving me. I don't know if that's even real time or not. Yeah, sorry. I think it's only limited to, like, you know, we got the yen, the CAD, the Swiss franc, Mexican peso. That's about it as far as the dollar pair. Sorry about that. Let me try something else though. Nah, it's not gonna work. Yeah, I'm sorry about that. All right, anybody else have anything that they would like for me to add here? No questions about anything? Everybody good to go? Pulse waves rocking for you? All right. Well, with that being said, I am planning to do a pulse wave webinar, a live one where we will pull up the pulse waves and go over them and do all that good stuff, answer questions. You all good, man. It's all good. All right, so with that being said, I guess I'll see everybody back in the trading room. All right, so always moving forward, folks. Everybody be encouraged, and thanks for participating with today's FOMC. Not a lot of action, but hey, you can never tell with these FOMC days. All right, everybody, be encouraged. I'll see y'all back in the trading room. Peace.